Cathie Woods just purchased about $1 million in stock of NextDoor Holdings. I would say the timing was great, as the monthly chart suggests. Price has bottomed, and anytime you invest, you want to buy low and sell high. Let's get into the article and a video before we continue to analyze the charts. So this article is coming from the Fresno Bee. Cathie Woods sinks 800K into one cheap stock. So Cathie Woods bought 250,000 shares in NextDoor on June 26th at the sacrifice of selling some Tesla shares. I don't know if that was wise or not. So the $800,000 is equivalent to 274,000 shares, just shy of 20 million for the value of ARK's total holding in the company. NextDoor closed at $3, up from the December lows at $182, but again, the stock was at $19 in November of 2021. So NextDoor reported 42 million weekly active users, a 16% year-over-year increase from its first quarter of 2023. So it is growing. However, when you are a young tech company, you are not making any money. So revenue for the quarter was 49 million, down 2% from the previous year. The company reported a net loss of 9 cents a share for the quarter, but said it expects to return to revenue growth and adjusted EBITDA margin improvement this year. What's a good thing is that NextDoor is above $1 billion in market cap, and it just recently joined the 3,000 index, which is good for its visibility. The CEO, Sarah Farah, said in a statement, "We believe NextDoor's inclusion will increase our awareness and visibility, providing us with the opportunity to reach a wider set of investors and contributing to our growth and purpose." I really don't know what NextDoor is, never even heard of the stock until I saw this article. So let's get into a video where we see Jim Cramer talking to the CEO about NextDoor. This video is about a year old. Talks about when NextDoor went public via SPAC, and gets into their business model.
To this because it is purpose-driven, and I'm going to use a silly word, but it's kind.
It is. Our ticker is kind. But yeah, we're very purpose-driven, as you know. Our whole reason to be here is to cultivate a kinder world where everyone has a neighborhood to rely on. We think that's both good for the world, and we think it's great for business, too.
So you've got an incredible acceleration. People love neighborhood. Neighborhood itself is a very important concept for you, both here and worldwide. It's all working.
That's right. Yeah, we're in 11 countries, 280,000 neighborhoods. We just saw great growth in Q3. We pre-announced our Q3. So we saw our weekly active users up 20% year over year and our revenue up 66% year over year. So people love the neighborhood and they're loving our platform.
Now, can you tell me about, there's a couple things that I think people need to know. But the first one is, why are you doing a SPAC?
So we really needed to raise money because when we looked at the company, we have a ton of opportunity. So we wanted to put more money on the balance sheet so we can go out and really meet our ambition. How we raise money, I think, is less, we didn't really care that much. We wanted to choose the right route for the company. We could have done an IPO. We're a high quality company. But the SPAC worked because we found a great partner in Khosla Ventures.
But Sarah, you're kind of a rock star in the business. You could have had an IPO, would have been a big branding method. Instead, you're going with more of a quiet way.
Oh, we think this is a big branding method. Don't get us wrong. What it gave us is some certainty. So remember, we locked in our valuation back in July. It allowed us more time to talk to investors. So I actually think it's a better branding moment because you're really getting to the fundamentals with investors over an extended period of time. And as I said with Khosla, it was more than just bringing money to the table. Vinod in particular, I worked for 7 years at Square. He brings a lot of experience. He's a great recruiter and a really good push at kind of decade-long strategies, not just 90-day strategies.
I think it's important to point out your personal interest in neighborhood. Could you talk about the Troubles?
Yeah, I mean, briefly, I grew up in Northern Ireland. I grew up during the Troubles, pretty tough time. And what I saw was neighborhoods riven apart because people were different religions. Where I grew up in a tiny village. My parents were the community activists, and they brought neighbors together. And so our Catholic neighbors were always in our house. They were there the night our windows got bombed and came in, and they boarded it up. And that, to me, has been the arc of my career, of recognizing this importance of community. And now I get to do it with this amazing team at NextDoor, and we're going to do it all around the world.
All right, so people are going to say, well, how are you making money? That's terrific, purpose-driven, sounds great. Kinds of ads, consumer, you've got consumer goods ads, but of course neighborhood.
Yeah, so what I saw in NextDoor was a great business model too. So we sit on a lot of data, and with that data we can do today a very ad-driven model. The ad market is amazing. It's fast growing, everyone's moving to digital, they're moving with NextDoor. We do great for advertisers like a Home Depot or financial services, anything that feels really endemic and local, and what we bring is local but at scale. And then of course we work for small businesses like your small business, where everything is local. Yep. So if you need a plumber, a dog walker, you need the local babysitter, things that are very high trust, where you need to hear from your neighbors, we do great for those small businesses as well. And we saw huge growth in our revenue in Q3 from those SMBs.
Shepard's.
So NextDoor reminds me of a mix between Yelp and Angie's List and eBay. Nevertheless, let's analyze the chart. So this is the monthly chart, and the monthly chart suggests price has hit a bottom. Cathie would time this to a T. She got in roughly at the $3 mark. So she confirmed that price was bottoming. Now, the true test of the bottom was getting a monthly close above the most recent pivot high. The next test for price is going to be these selling wicks at $4. Let's mark that a different color. Let's go to the weekly chart. Okay, so when I'm looking for a reversal or bottoming pattern, we got it here. This is the W that I look for, which is essentially a double bottom formation. And a break of the apex, which is that pivot high. So we can see the weekly candle of June 20th was on high volume. So if you are a confirmation or conservative trader, here's your level to get long. Pending price pulls back. And let's call that weekly buyers at the 280 level. Again, the first test is going to be, or the next test rather, is going to be the $4 level, which is going to serve as resistance due to the selling pressure of these wicks. If we get a close above the $4 level, your next level of at least a pause in price is going to be at the 550 level. All right, so let's go down to the daily level just to analyze that weekly buyer's level a bit more. Okay, now the structure is not the best. However, you do have a rally in price. And typically you see 3 to 5 basing candles, but in this case you probably got around 10. And then prices move higher. So this is a valid buy level if price can pull back. Again, I think Cathie timed her entry to a T. Let's scroll back to the monthly chart. The long-term target becomes $10, as that was where we had support for many months before price went higher to eventually go lower. Again, great timing, Cathie. Hopefully you are right on NextDoor. Thanks for watching. Subscribe. Please like the video.